Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to do part 2 of the strong buy stocks that analysts are recommending right now. I did part 1 yesterday and just was looking at the feedback this morning and it looked pretty positive. So instead of reinventing the wheel, I'm just going to keep going down the list. Literally have hundreds of these strong buy stocks that I can reference out of TipRanks. And what I do here is just pick a couple names, give you my opinion on it, go double check some of the stuff I'm seeing as far as EPS, earnings, what kind of momentum it has. So that's what we're doing on this video. Reminder as always that my stock picks and projections, they're just my opinion. Please make sure you do your own research before buying any stock. And of course, if you like stock market analysis like this, please subscribe to the channel, give this video a like. Thank you to everyone for all your support. All right, just like last time, I'm going to use the TipRanks stock screener to kind of put in some custom parameters that we're looking for. This is a paid membership site. If you're interested in learning more, potentially supporting the channel, my affiliate link is in the description. I'll also link to one of my TipRanks review videos that you can look over and see if it's a fit for you. Now, for purposes of this video, here's what I set up, and I talked a little bit about this yesterday. Market cap, mega, large, medium. I am skipping small and micro stocks just because in this period of volatility in the market right now, I want to aim for companies that are generating big revenue and hopefully big profits as well. Also have the filter set on the smart score, 10 or 8 and 9. Both of those are outperform categories. Smart score is basically TipRanks quant formula, right? Where they assign their own quant analysis to each stock. And for the sectors today, I'm going to do consumer goods, services, and technology. These are fields that I'm very comfortable with, so I'm just going to stick with those for now. All right, and finally, we only want to get strong buys here. So I eliminated all of the others. We're looking for buy stocks that I can share my opinion on. And scrolling down to the last filter, best analyst price target. So with TipRanks, they rate analysts and they basically have a star system. And with this, I just want 4 and 5 star analysts. I don't want the underperformers, you know, the 3, 2, and 1 star. And I want to get the price target that has the most upside. So essentially the most bullish price target out of all the options. Okay, so these are the results that it put out. And remember, I'm sorting by best analyst price target, right? So this is a single analyst price target for the stock. And I also want to make sure that we have strong buy signals. The closer to this sort of full circle that you see with RingCentral, the better. And so what we'll do is we'll pick off about 5 names in here that we'll do today. Then we'll go over to Yahoo Finance and take a look at the facts and see if we can draw a conclusion. You know, is this stock really a strong buy? All right, at the top of the list, we have Sumo Logic. Price today of $21.57. Smart score of 8. Strong buy, but only 5 buys and 1 hold. That's typically, you know, a cheaper stock is not going to have as much coverage from analysts as you'll see across some of the other bigger names. But one analyst in particular has a 61% upside to $34.80. That's pretty intriguing when you take a look at the 7-day chart, which is, you know, going downhill. Now, myself, I sort of like to see these charts if we can get some support for the future because it just means that it's a potential value buy. All right, here we are, the Sumo Logic page on Yahoo. Got a 1-year chart here for you. And one of the things that I like about TipRanks and this kind of exercise for a video, I didn't know a whole lot about Sumo Logic, to be honest with you. I'll show you very quickly their website. It looks like they do secure, monitor, and troubleshoot any app in any cloud, all in one platform. So somehow, some way, they are taking apps and they are monitoring them. They are acting on threats, and somewhere you get some business intelligence analytics in there. So I could see that this could be a hot stock, right? Just because apps are going to be a big part of our future life. So let's take a look at the fundamentals and see what we find with Sumo. And it looks like the peak for Sumo Logic is about $40 or so. What is that? February 16th. So it makes sense that our top analyst would put a $34 potential price target on it, because it does look like it is capable of hitting that number. However, when I look at the basic fundamentals, there are some things that I don't like right off the bat. It appears this company is not a profitable company, so we don't have a PE ratio or EPS. In this current volatility, I am really trying to stay close to profitable companies. Now, I have some companies that are not yet profitable. DraftKings, just to pick a name out of a hat. I'm trying to think if there's another one. Unity Software. So I did choose those stocks and purchase them even without an EPS. But generally speaking, heading into this year, if a company is not raking in profits, then I would just be very leery. If we do see market weakness going forward this year, it's going to tie back very strongly to EPS and PE ratios. And if that happens and you have a stock that can't support its current price, you could be in for a wild ride. Now, off to the right here, Yahoo does this little chart of consensus EPS and if they beat or not. Looks like the last 2 quarters they did. I'm not sure how well you can see the scale. It is a negative EPS. But kudos to them. It looks like we're on track. However, one thing that caught my eye down here that I don't particularly like is this revenue and earnings are kind of heading in the opposite direction. So as revenue goes up, earnings should go up, and just this eyeball of this chart looks really bad because you have a company where revenues are going up and earnings are going down, which is exactly the opposite of what we'd hope to see. So let's dig into that a little deeper. Scrolling up to the top of the Yahoo page, there's this tab Analysis. I look at it a lot just to get a high-level view. And what I really like is this earnings estimate and revenue estimate on this particular page. A year ago, EPS was negative 67 cents. The current year, which it looks like they're in fiscal year 2022, they are expected to make some progress, I guess you would say, at minus 48 cents. And then next year, maybe minus 44 cents. Now, I got to be honest, for me, that doesn't look like a lot of progress. But let's take a look at the revenue estimates real quick. So down here, year ago sales, 200 million. Average estimate is 223 million this year. Then a little bit bigger bump next year to 258. That sales growth estimate is 10% for 2022 fiscal year and plus 15% for 2023. So after looking at these things, bottom line for me on Sumo Logic, to be honest with you, I'm not interested. There's just not enough in the metrics, the raw metrics, that suggest this company is going anywhere fast. They might just be, 3 to 5 years away from doing something special. The only X factor, with my opinion, that you would have to dig in on your own is to read through the earnings reports and read through the news headlines and see, like, hey, is Sumo Logic developing a new technology that's not represented in these metrics that could help it push over to a faster pace of EPS and revenue? I guess if you saw that, you could make the argument for it. I'm not familiar that they're working on anything particularly phenomenal, to be honest with you, but I didn't spend a lot of time on it. All right, flipping back over to TipRanks, pick our next stock. FYI, LiveRamp Holdings is in part 1 of this series that I recorded yesterday, and it's already live on the channel. Bilibili, this is a Chinese stock that may be the greatest thing ever, but I'm not currently investing in Chinese stocks, so I'm going to skip over it and go right to RingCentral, price of $3.39, smart score of 10, and it's got the full strong buy circle, so you have 21 buys here. The top analyst is projecting a price of $488.56, and you can see this is a 7-day chart. Looks like RingCentral is on the ups. All right, and real quick, if you're not familiar with RingCentral, they're basically a cloud-based phone and video conferencing system. I'm familiar with it only because I actually use it. So just a quick peek at their menu. They have the Office, like I said, cloud-based phone. They have video just like Zoom. They have a messaging platform that you can use for employees. I don't have any employees, but basically it's like an enterprise level phone system based in the cloud that you could roll out for a number of different Office applications. Taking a look at the stock today, 341.35, and the 1 year chart you can see right here. We have had this little dip since the meltdown in the market last week. So it went from a peak of 443. You shaved about $100 off of that. Let's see down here. This is another one, EPS negative 94 cents, so no P ratio. Look off to the right on the earnings. Things look pretty good. I'm not really surprised because cloud-based phone systems, obviously, were going to be popular during the pandemic. And since this is a subscription-based business, it looks like they have been able to handle the momentum and keep their customers on board. Looking down at the revenue chart, it's another one, man, where sales are up a lot, but the earnings are down even more. So this is one where you're buying ahead of time and you're hoping that eventually these earnings catch up with the revenues. Let's see what they're being projected for real quick on the analysis tab. And this looks a little bit better. So we're in a current year of 2021. Now they are saying year ago EPS at 98 cents. Average estimate for this year at $1.23. Next year, $1.57. If those happened, then that would be encouraging. However, don't forget this price of $3.41. I'm also a little concerned because you got the 98 cents here, but if you go back to the summary tab, the EPS was minus 94 cents. Now that's a trailing 12 months metric, but you just have to be careful when you're looking over things to make sure that, hey, last year, did they really hit a positive GAAP EPS of 98 cents? This is one that I would probably go to another website and just confirm that information, perhaps read through their Q4 earnings report if that's available. But let's just assume it's true and we'll call it $1 for fun. That means your PE ratio right now is 341, and maybe you're saying, hey, I'm buying it high because this is a growth company, right? Okay, fine. But your EPS is only going up 23 cents next year. So at the end of 2021, and frankly, into 2022 at $1.57, that PE is not even close to 100. So let's take a look at revenue and see what we got. Year ago sales, 1.18 billion. Average estimate this year, 1.5 billion. Next year looks like 1.83 billion. That's a good growth rate, 25% and 23%. My initial feeling, though, is this stock is too expensive for me right now. I actually love the service with RingCentral that I use, and this could be one where it's growing so fast that there is a pipeline of products coming out that could lead to more revenue. Obviously, you could beat these numbers, particularly in 2022. But if you beat them, right, and you landed at $2 per share, then your P ratio is sitting in the neighborhood of 170. That's not the worst thing in the world, but it just still feels overpriced to me. You can like the company, which I do. You can like the company and what they're doing, but not like the stock price. And I guess that's what I'm saying here with RingCentral. All right, back at TipRanks, I'm going to pass on Itron. I'm not familiar with it. It also has a recent sell rating, and this graph is down, so I'm just gonna pass on it altogether. Alibaba, let's take a quick look at Alibaba. Price today at 231. By the way, this price will be refreshed when we get to Yahoo, obviously, because Yahoo is running in real time, and I haven't refreshed this page in a while. Smart score of 8, and we got 18 buys and 1 hold. Top analyst sees a price of 320.92. And it certainly looks like the stock is inching that way over the past 7 days. All right, Alibaba, 1-year chart. Things were going really good to about $317. And what happened with Alibaba is, they had that IPO come in of Ant Financial that ran into some major regulation challenges in China. And, the rumor on the street was basically Alibaba got blackballed in China and prevented from going live, and the government had all these concerns about how much power does Alibaba have and do we want that, and the stock really tanked. So it looks like it hit down to 222 and boosted itself back up to the 270s. Then we had the market meltdown, which I assume is the key influencer here, and now you're at 232. Now our TipRanks top analyst is projecting another $100 at 320. Let's see if we can get there. Right off the bat, PE ratio under 25. So that's exciting just based on, name recognition of Alibaba. Not to mention, we know that they're a tech and e-commerce play, high growth potential. So this looks pretty good, at least for right now. EPS, $9.31. Much different story than the first two stocks we looked at. Off to the right, you have the earnings chart, and they have continuously beat their earnings, which is great news. And scrolling down to financials, this is how a financials bar chart is supposed to look. You sell more things and you make more money. So see how the blue line is going up, and did you notice how that was not the case on RingCentral and Sumo? So if you're new to investing, in a perfect world, you sell more lemonade cups, you make more money, right? If you don't, you could be doing things wrong. All right, let's take a look at the analyst's opinion on EPS and revenue. 814 a year ago. We're in fiscal 2021. Average estimate for this year is 1032. That is up a little bit from the price we saw on the previous page. And then next year they add about 20% to that to get to 1204. Looking down on the revenue chart, last year 78 billion, this year 109 billion, next year 142 billion. That's growth of 39% and 31%. So for me, honestly, I see almost zero red flags here from a raw data perspective. And I would have to agree that Alibaba has some room to run. If we assume that this was $10 even, just for fun, and we know that the analyst was projecting a price of 320, if that analyst is correct, that's only a PE of 32. So it's not really like that big of a call to go there. And if you got to the PE of 32, you're adding another couple bucks of EPS per share. So I like Alibaba here. I don't typically invest in Chinese stocks, just a personal preference of mine. But anyone who holds this stock or is thinking about buying it, it's really hard to argue the value that Alibaba is demonstrating here. All right, next on the board is TWLO, 367 today, smart score of 8, strong buy, 21 buys and 2 holds. Best analyst is calling for $507, which is 38% up from where we sit right now. And you see they had market meltdown and an immediate bounce back, very similar to Alibaba. So let's check them out. If you're not familiar with TWLO, it's basically a marketing tool that gives you sort of a 360-degree communication platform for your customers. You see their little tagline, engage customers on any channel at any time, from text messages to emails, phone calls, video, chatbots, and back with a single powerful platform. All right, stock price today, $368.64. This is your 1-year chart. Things look to be going pretty good. We obviously had the recent market dip, so dropped down to 320. Looks like the high in here was about 443 or so over the past year. Dropped all the way down to 320, and we're starting to bounce back here in the market. Here at 368. Now remember, our top analyst for this one had a price of 507. So we have to get from 368 to 507. Let's see if it makes sense. Just going by basic fundamentals, you got an EPS of minus $3.35, so no PE to worry about here. Earnings, looks like you've got significant beats over the past 4 quarters, which is a very positive sign. On the financials, we have revenues going up, earnings going down. So a very common theme on some of these stocks I'm picking out. So let's dig in and see which way this company is headed in terms of revenue and EPS. Scrolling down a little bit here, we've got year ago EPS of 23 cents. That's another one you're going to have to look into because this year it's actually supposed to go down to minus 13 cents and then bounce back to positive next year at 30 cents. This could be a fact if Twilio made a acquisition, would be something where the EPS, which is essentially profits, right? The EPS could go down while the company is still doing good things. I'm not familiar enough with Twilio to comment on that, but keep in mind that acquisitions and mergers can definitely chunk out some of your earnings per share. But just for fun, looking over here at 2022, and we'll just take this high estimate, right? 94 cents. I'm going to pretend it's $1. If all those things happen, which were basically, you know, like 3 iterations away from it, if those things happen, your P's at 368. Okay, so somewhere in Twilio's world, I would need to personally be shown that this EPS is going to be essentially tripling or getting to 4 or 5x time in the next 3 to 5 years to make it compelling. At its current pace, I'm not liking what I'm seeing. However, on the revenue side, you get a feel for why the stock is doing what it's doing. 38% beat anticipated for 21, 30% beat for 22. Year ago sales 1.76 billion, and this year 2.44 billion. Next year growing at about the same pace. So we are talking billions of dollars here. Obviously sales are having a huge impact on the price of Twilio. It's very, very difficult for me to envision the $500 plus stock price that the top analyst on TipRanks has for this one. But you know, if sales and mergers and stuff happen, new technology comes out, they certainly could make a run at it. I think on this one, though, you are pushing for a higher multiple more than you're pushing for value created, at least my 2 cents. All right, back on the TipRanks board. Last one for today we'll do is DocuSign. By the way, if you guys like this format, a couple of people commented on video number 1. If you just give me a like or put a note in there that you like this, and I mean, obviously I can do this stuff forever, right? I don't want to do nothing but these videos, but if you enjoy them, you know, I make videos for you to enjoy, so we can certainly do more of them. DocuSign price, 208, smart score of 10, strong buy, you have 8 buys and 1 hold, price target of 287, so plus $80 or so from where we are at today, also plus 38%, 7-day chart. You know, everybody's is looking the same because you had this market meltdown at the end of last week, heading into the beginning of this week, and now we've had this bounce back. So this V chart, not ideal, but this is what the market is doing, I would say, more or less than what a stock is doing. All right, DocuSign. I think we all know what DocuSign is. Hopefully you've signed a DocuSign document, basically cloud-based PDF signature software that if you have contracts and stuff, you no longer have to physically sit in an office. So great product. It's by far the market leader. And over this past year, no surprise with the pandemic, they had a nice run on new contracts and clients. Took the little dip like we just talked about down to 192 and bouncing back up here today. Going down to the fundamentals, EPS minus $1.31, no PE ratio. Earnings look good. They've hit over the past 4. Financials, I will say they've made progress. Revenue progress is phenomenal. Earnings progress, yes, in 2020 they did. I'm a little concerned about the way 2021 is tracking, but that could be a merger and acquisition, so you'd have to read more. Earnings estimates, year ago EPS of 90 cents. So that is either not represented on the trailing 12 months EPS that we have here, or else it is non-GAAP is all I can think of. So again, on EPS numbers, you have to be careful. I'll tell you who always screws me on GAAP versus non-GAAP is NVIDIA. They present it as GAAP, and it's just weird. So just make sure you understand what you're looking at. Average estimate for this year, we're going to assume it's GAAP at $1.14. Next year, you get to $1.78. So if this is true, let's just pretend they hit $2. You got a high estimate of $2.65. So we're going to round it up to 2 in fiscal year 2023. That would bring your PE down to 100. So you're getting closer for a guy like me. I don't mind paying up for growth. But I do kind of put a cap on it, and I'll tell you, like, unscientifically, PEs, forward PEs over 100 start to make me bite my nails a little bit unless I really love the product. Let's take a look at sales. Last year, $1.45 billion. This year, $1.87 billion. Next year, $2.39 billion. So 28% growth projected over the next 2 years. I guess bottom line for me and DocuSign here is it's a maybe for me. You had the TipRanks analyst coming in at 280. You're at 211 today. Quite honestly, I liked it a lot better at the dip point of 192. And if we see any more weakness, the 192 could go down any farther. For me personally, if I was reading their earnings reports and more importantly, probably the earnings PowerPoint slides where they talk about new features that are coming out, where some of their growth is, you could probably talk me into DocuSign as a long-term hold. But if you did talk me into it today, then I am probably targeting under $200 as an open point for this one. All right, guys, so those are 5 more strong buy stocks according to analysts in TipRanks. And I shared my opinion with them. I mean, out of those 5 that were in there, I kind of had like an absolute yes on Alibaba. As far as Twilio and RingCentral, RingCentral in particular, I love the product line and I'm a customer. I'm very happy with it. And I know Twilio's big in the digital marketing space. So I like what those companies are doing. It just feels like it's run up compared to other stocks that are available right now. So anyway, that's my 2 cents on these 5 stocks. Hope you enjoyed looking at them with me. Let me know if you like any of these in the comments. If you enjoy this format in particular, let me know in the comments so that I can continue to make more of them. Thanks everybody for watching. Please give me a like and subscribe. We will see you on the next video.